All right. Good morning. Good morning. Good morning. I'm in a new city. I'm not in Masaka. I traveled very early in the morning, but it's a privilege to be here. I'm in a city. I'm into another city. Very, very soon I'll be able to announce where I am. I want to thank you for making a decision to be here. Okay. So thank you so much for being here. I've just parked somewhere, and so that I could do this, then be able to continue. I decided to drove this side because I have around 5 to 10 people that want to activate their robots, and it's very, very important for me to get to them. And I want to thank the people of the previous city that have been in the morning at around 6 a.m. that have also activated their robots. We are on fire. We are more excited, and I take it upon myself to make sure that I make things happen. I do not expect anyone to do it for me, but I have to do it for myself. Someone asked me, are you traveling with somebody? No, I'm traveling alone because, success is a personal journey. Others can join you along the journey, but it starts with your personal initiative. So I want to thank you this morning for deciding to be here. This week, before we bring back Coach Mopiwa, we are privileged to welcome the CEO of Galaxy Crypto Academy, who is on our call this morning. And he'll basically now move us into an amazing topic, the market structure, support and resistance. And then Coach Mopiwa will be back with the different chart patterns. Ladies and gentlemen, he's already in the house, and it is a privilege to welcome my friend, my brother, our latest TV3, ladies and gentlemen, in the Crypto Ambassadors team, and the CEO of the Galaxy Crypto Academy. The gentleman who's very good at looking at coins when they're on an uptrend and give you perfect entries and quick exit in the market to help you multiply your income. Before I invite Coach Coach Musa, allow me share an idea about what is going to happen in the crypto market space. Let me try to paint an idea. I'll be able to share a blog post written by Glassnode, and this company has come up with factors that could affect the market, and that is the ETF. What factors could bring the ETF? We expect a little move of or close to $70 billion, a surge of the market, around $70 billion to be able to enter the market. But I've been trying to monitor what is happening into the whale market, the investments. Allow me just try to show you guys how much it is moving in the whale. If you look at how the whales are working today, I hope you can see my screen. Okay. When you see how the whales are working today, you can see that we can see 11,199 Ethereum. That is over $224 million transferred from CoinCheck to a known wallet. We can also see more Ethereum getting into the market. Yesterday in the evening, we saw $64 million that were transferred from Bitflex to Kraken, that is in the US. We have also seen $150 million that have been transferred from the Treasury, Tether Treasury. And when this started to happen, we also see another $150 million. So since the weekend, we have seen billions of money entering into the market space. I want to promise you one thing. If you have been dozing on this business, I've been monitoring these whales for the last 2 weeks. A lot of money is coming into the crypto market space. And this is coming at a time when the Bitcoin ETFs have not been brought in the space. So I want everybody to pay closer attention to the training going to be done by Coach Musa and Coach Mopiwa and all the leaders we are bringing across, because they are sacrificing their time pay close attention. Please don't multitask. Be here while they are teaching. I know they're not going to teach a lot of, I believe by the end of today, Bitcoin might go to over $41,000 because I see it's already at 4878,000. So I believe that we could see $41,000. Pay attention, get excited, and never quit. Let me invite Coach Musa, who's already in the call, and Coach Mopiwa is also around, so that he could start our session this morning. Welcome, Coach Musa, one of our leaders, and it's a privilege to have you with us this morning.
All right. Thank you very much, Leader Julius. And it's been a while. I hope you guys are fine. And you guys have been attending trainings and actually not only attending, but rather trying to apply whatever you're being shared to with regards to trying to learn more, because practice makes perfect. If you taught something and you don't try to practice it or you don't apply it, sometimes it will be meaningless. It will be time wasted, and more so, it will be also wasting of resources, the data, and that you would have probably be using for other things. So I hope you guys have been learning. I know learning never ends, and irrespective of how the sharing would be, we call this sharing, not actually teaching. We call it sharing because we believe so much that within the community, we have a lot of knowledgeable people, a lot of people with skills. But then what we always try to do is bring in the aspect of sharing, sharing at different angles in a manner in which everything that seemed or might have looked very hard or difficult to grasp becomes more simplified, becomes more easy for you to understand them. And I believe the way we handle the class, not only myself and all the leaders that normally share here, we tend to bring in an aspect of simplicity, which makes it easier for you to understand. We tend to relate so much things into the reality other than the technical term. Yeah, that is mostly used by most people because we believe the technical terms are literally nothing, but just something trying to be communicated in a manner that may confuse you. So instead of confusing you, you have to understand it. Okay. So I'm going to share with you today, and I hope we benefit from this training. And yeah, we try to put a little bit of sense in them. Now, today we're going to talk about, I'll be talking about, normally I prefer beginning from some point, but nevertheless, I'm going to begin from any point so that we can move forward. I was informed that you guys were through with the candlestick, meaning the anatomy of the candle and then its interpretation and what it all means, or the significance, and always, as we say, the type of the candle, the name of the candle sometimes may not be very important, but rather the significance of the type of candle formed within a particular price level is what will give more science. Yeah, is what you should pay attention much to, other than mastering or cramming the name of that particular candle. Okay, and I believe that went on well as well. So after understanding the aspects of candle and relating it to the real market structure, we now have to dive in and try to look at the market movement. And in an attempt of looking at the market movement, we bring in the aspects of what are those particular levels within which price tend to respect so much if they're moving, if they're actually in a particular market sentiment, they're trying to move in a particular direction. All right, that is what we're going to dive in so much in details today, and we try to look at. Okay, so I hope the sharing will be beneficial to all. Let me share my screen. Just a minute. Let me share my screen. Okay. Okay. Yes, pardon me a little. Okay. My screen is misbehaving. I don't know why it is not responding, but okay, it's fine now. All right. Okay. So, sorry guys. So I'm going to share something here, but into that. Okay, look at him. So we're looking at support and resistance today, and we have to understand what a support is and what a resistance is. These are just terminologies. In other words, that that is so much related into technical analysis, and support and resistance are simply they are simply just levels. They are actually levels. There are actually levels of prices which tends to limit the market range of movement. Okay, they tend to limit the range of market movement. And what do I mean by that? You see, these are price levels upon which once price approaches them, all right, they are levels upon which once price approaches them, the market price tend to react to them. All right, it's just take it like these are you have you have different price level, like we are seeing here. Like this is a price, this is a price, these are different prices or price levels, and those different price levels on the chart are actually what you would refer to as a resistance or a support, depending on where the price is reacting on. Now, these price levels, they tend to limit the movement of the market prices. All right, there are price levels to which once price approach them, they tend to react, and the reaction normally happens in two ways. The reaction can either happen by the price breaking above that level, or the price being rejected. In other words, a reversal happening. Okay, so like for example, you can have this kind of movement. For example, you can have, we know that of course I told you there are certain things that I may a little bit maybe skip for purposes of time, but I wanted to begin from maybe let me just try to look at it a little bit. You see, there are about four there are four price delivery algorithm. And when I talk about four price delivery algorithm, these are actually events that happen to bring about a particular trend. All right, and we have this. There's what we call. I'm going to just demonstrate it. I can talk about it. We have prices moving in this manner. Okay, we tend to have this kind of movement so often. All right, and this kind of movement within the market structure is what we call the consolidation. This is what we call price consolidation. Yeah, that the price will tend to consolidate so much within a particular price level. All right, and this is an event that happened for some time, okay, before a particular sentiment is established in the market. Now, when price moves in this manner, this is what we refer to as consolidation. This is consolidation. In other words, when you see price moving in this manner, it means the traders are accumulating more positions. they are trying to accumulate more position. And in the process of accumulating more position, what happens? They're trying to build up a momentum that should move the market price to a particular direction. All right? Right? They're trying to accumulate, to build pressure, to move or to build momentum, to move the market price to a particular direction. And once the price breaks above or breaks below this area of consolidation, we shall call it price expansion. So here, the price will then have to expand. Okay? The price expands by either rising and breaking above this area, okay? Or it can also break below this point. So meaning it is moving off the areas of consolidation. That means traders have sufficiently accumulated enough positions to be able to move the price to a particular direction. Now, normally, what happens is if accumulation happens here and then there's a massive sell, expect the price to expand enough and the traders are willing to move the price to the upside, then expect the expansion to happen above. All right. Now, here, when this happens, we call this expansion. So we have consolidation, expansion. All right, in either direction. It can happen to the upside or to the downside forever. There's going to come a point where the price will come to a halt, right? If the spectrum comes to a halt, there will be what we call retracement. All right? Retracement. We shall try to retrace. And normally retracement happens in an attempt to build up momentum to push the market sentiment to that particular direction. Right? Retrace market sentiment to that direction in which expansion has happened. Right? Like here, you should see that expansion has happened to the upside, right? A retracement will happen in an attempt to build momentum to continue this trend, right? I believe so. The retracement will be an attempt to build up momentum to continue the previous trend, to continue the previous expansion that happened. That event that happened that caused a breakout of consolidation region. All right. So once a retracement happens, retracement normally will happen to a point near or exactly to the point where the breakout happened. Like it can happen here, exactly, or it can happen in an area closer to that point of the breakout. Okay. So now, once that happened, then we expect a break of structure. This very point that halted the market price from rising, okay, of course, will cause a reversal in an attempt to retrace. Now, once a retracement happens and the momentum is built sufficiently, expect a breakout. A breakout here now means we shall have a break of structure. So the price is going to break past this level which halted it previously. It will break of that. Now, once that breakout happens successfully, then we shall now confirm this expansion is a continuation happening here. So meaning this is a continuation in the trend. Which trend? The bullish trend, right? So that is what we've got. So once a break of structure happens here, then we say that is a confirmation of a continuation of a bullish trend, right? Now, that is a terminology I wanted to bring forth so that we understand what we're going to share today with regards to support on the Sorry, guys. I don't know what happened. I really don't know what happened. Guys, pardon me. I hope we were still following. Please, if we were still following, maybe let me see a one on the chat. Okay. Some people are saying they're not understanding completely. Some people are saying the audio is breaking. Oh man. So let me just see. Let me try to check on, let me try to work. Let me change the network. Let me just change the network. Let me change the network, please. If you're not understanding my teaching, then I think you really may not understand. You may really not understand, honestly. Maybe if you attend more, it will make sense. But if it's your first time, then definitely it may not even make sense at all. Just give me a little moment. Let me change the network. I'm changing my network, so bear with me.
Okay, our leader is coming back. Just wait. He was very clear. He's changing network. So someone who is calling me on WhatsApp that why can't you hear anything? Calm down. It's a non-controllable factor. You know, in life, there are people who work from what we call a circle of influence, and others work from what we call a circle of concern. You know, when you want to be a successful entrepreneur, you must be working from a circle of influence. Now, what is a circle of influence? When you work from a circle of influence, you focus on things you can control. Okay, you focus on things you can control. And you do not put your focus on and energy on things you cannot control. And so many people give their excuses on things they cannot control. So the network is a non-controllable factor. So it cannot be your concern. So you need to work from the circle of influence, things you can control. And so we wait for him as he's coming because he's just changing network. As simple as that. there you decide to work from a circle of influence. I see Coach Musa is here, so let me make him a host and you'll be able to go on. Welcome.
All right, thank you. Thanks for the patience, and sorry for that. I think I was using Airtel, so I guess I decided to change to MTN. I hope it is a little bit audible now, and it's a little bit clear. Can I confirm, please, if it's no longer breaking? Is it still breaking? Is it clear? Mm-hmm. Okay, let me guess it's fine. It's clear now. All right. So let me begin with responding to the guy who was saying he did not understand completely. I hope, I don't know whether you're an old comer or you're a new person. I want you to first of all remove negativity in your mind. Yeah. Honestly, for you to understand the teachings here, first come with an empty mind. Empty your cup so that it fills up. You may be good at that. You may have some prior knowledge about that, but first listen to what we shall share out, what we may come out with, and take upon yourself to pick what you can pick. All right. First of all, don't have that negative mindset that you have not understood. Oh, you're not understanding. Oh, you don't want to understand. Honestly, you will not, and you will never understand. But if you join the meeting with an open mind and try to follow keenly without any interruptions from external factors, just take your time, relax. It's a long way. This training is a long way. And normally it is repeated. Okay. So if it is the first time, probably my approach of teaching may be different from what the other leaders were, how they were using. But yes, relax. Okay. So relax. You will understand. Don't worry. Yeah. So this one here. Oh, was it spirit something consciousness? Because you gotta relax, my friend. Otherwise, you'll make the rest also not to understand. And that is the bit I don't like. I don't like. Okay. That aside, let me come back. Let me just come back and try to do what I intend to do. Okay. What I was talking about, maybe let me even go more slower so that it makes now sense. We have what we call price delivery algorithm. Price delivery algorithm, in a simple term, you may have definitions upon definition, but in a simplified version of price delivery algorithm, they basically refer to the events or activities that happens in the market to bring about a particular market sentiment. When I talk about market sentiment, I mean the market. Okay, I believe they shared with you the different types of market structure. The ranging market, the bullish market, and then the bearish market. Or you can call it a downtrend market, an uptrend market, and a ranging market. Ranging market sometimes is also called sideways market. I believe you're aware. So the event that brings about those three types of market movement is what we call price delivery algorithm. And there are 4 events that brings about that. Before you have a defined conclusion that, okay, this is the bullish trend. All right, this is a bearish trend. Oh, this is a ranging market. Events should have happened. Oh, it has to happen. You have to, based on the events that has happened. It's making sense now. And I said there are 4 market sentiments. One of them is called consolidation. Consolidation. Okay. Consolidation. And just a minute. Let me just check on. It's called consolidation. And then okay, it's called consolidation. And then the second one is called expansion. The third one is called retracement. And the fourth one is called reversal. These are the four price delivery algorithm, the events that brings about a particular market sentiment. Okay. And we started talking about the consolidation. We said the consolidation is more or less similar to a ranging market situation. And at the same time, it is within the ranging market situation where accumulation happens, where traders tend to accumulate more positions. All right. Right. I wish to have talked in detail, but let me just leave it at that. Okay. So once traders accumulate position, they're going to cause a momentum to a particular direction. Like for future traders, why would future traders, for example, accumulate position? You know, future trading is the type of trading where people profit in a direction of the market, either to the upside, all right, or to the downside, all right. But as long as, okay, so for future traders, accumulation is an opportunity to either sell, we call it long, okay? Sorry. So to either sell or to push the market price to the upside. Now, if, for example, they sell, they're going to cause the effect of the selling, the effect of that selling is going to affect the market negatively by bringing about a drop in the market price. That is a scenario where we find that a dump has happened in the market after some series of ranging in the market or consolidation. Then we have a drop in the market price significantly. Now, that's what we call dumping, meaning in that case, the traders, the future traders at that point would have sold their positions to profit. As a sports trader, it will be sort of like a disadvantage to you. It will be a disadvantage to you because if you had entered the market within that market situation, that means you will go into floating loss. All right. But then if the market price moves in your favor, the breakout happens in your favor from the consolidation, meaning the market price goes to the upside, it is in your favor as a spot trader because you'll be in position to profit. All right. So these are the events. So the first one is consolidation. Then it becomes about expansion. And the expansion happens in either direction of the market. It can happen to the upside or to the downside. So, but for that to happen, that should be a market movement, right, significantly, like we have seen here. So once this happens, we call it expansion. We say the price has expanded to the upside. If it happens in the negative direction, it means expansion has happened to the downside. As simple as that. But normally, if an expansion has happened, the price does not expand forever. It reaches a point of a halt. The momentum keeps on reducing. And once momentum reduces, it is going to come to a price level where it is going to come to a halt. Then it is going to have a reversal, irrespective of the direction. If it was on an upside, it is going to come across a price level which will halt it, and then it will have a slight reversal to the downside. This slight reversal in an attempt to build momentum is what we call a retracement in the market. And retracement normally happens in an attempt to build momentum to continue the previous event that happened, which is expansion, right? So if retracement happened, retracement normally happens, and normally it happens to the very point of a breakout or to an area closer to the area of breakout or to the point of breakout. So if that happens successfully, then we have a reverse again, the market trying to show you the movement like it did previously, and it finally breaks that point, that price level which halted it from continuing previously, then we shall call it a confirmation of a bullish trend. So it is an event that happens continuously, but up to some point where another another price delivery algorithm will set in, which we are calling the reversal. So once the price moves, it will continue moving like that until a point is going to come where the momentum will really reduce significantly. Even if it was going like that, it's going to reach a point where now the momentum reduces and people will begin taking off profit. Traders will begin taking off profit because this will be a significant rise in the price. So as they begin taking off profit, we're going to have a shift in the market structure. We're going to have a shift in market sentiment. And once a shift in market sentiment happens, we shall definitely now call it a price reversal. Price reversal from an uptrend to a downtrend. So these are the 4 events of event that happen. It is a cycle because it repeats itself. Now, ladies and gentlemen, these were points which brings about a halt in the market price with respect to the direction checking is what we call trend lines. Trend lines termed as support and resistance. All right. So in other words, support and resistance are price level which brings about a halt in market price movement. Which halt, if the price was on a rise, okay, that price level, that point where the price on approaching is going to prevent it from being upward, known as, because it is resisting the price from continuing to the direction it was taking, which is an upward movement. Now, once okay. All right. Network is really bad today. I hope I hope you guys are following. I hope it is trying to come out. It is trying to make some sense now. Hope it is trying to make some sense. So now, let's talk about support and resistance. So these are price levels, as we said, where market prices tend to respect. They bring about a halt. And the halt can be when the price is on a rise or when the price is going down. When the price is going down, that price level which is going to bring about a halt, right, preventing the price from continuing down, would be called a support. So let's assume we were having this kind of movement. The market price was going down, then it comes up across this price level. Once this price level prevents this price from going down, right? But in other words, it causes a bounce to the upside. Okay, we shall call this price level a support level. Why? Because it prevented the price from continuing down, but not only preventing it, it also brought about a reversal or a bounce to the upside. So that means it has really supported it. It has prevented it from going up. Then once we have an uptrend and then we approach a price level which prevents the price from continuing further up, then we shall call that level a resistance. All right. So a resistance line or a resistance area is that price level or price area which prevents the market price from continuing upward or continuing to rise and bringing about a reversal to the downside, or what we call a bounce to the downside. All right. Now, a line would be called a resistance if the price is trading below it, and a line will be called a support if the price is trading above it. All right. Does it make sense? If, for example, like here, let me just bring this back here. You see currently where the price is trading at for this coin. We are seeing a scenario where this is the current market price, and anything that is going to be below will be a support, and anything that will be above will be a resistance. So a resistance line is normally above a market price, and then the support line is normally below the market price. Okay, so any point, any price level below the market price is a support. Any price level above the market price is a resistance. Now, I want to bring in the aspects of how you come about to identifying this support and resistance line. We said these are series of events. They are like a pathway. They are like a pathway which prices tend to respect. The price tend to respect this pathway so much. Like, for example, if you have this, if you have, for example, this kind of movement, this sort of movement. So when you have a continuation in this kind of movement, this very points, this very peaks being established, those are the points you identify to draw your trend line. Okay, the inverted V and then the V itself, the inverted V and the V itself. So how you identify a resistance line, you have to look out for what we call a V shape. A V shape. A V shape. I mean an inverted V shape. Sorry. An inverted V shape. Look out for a point with a peak like this. Should be something like this. At least a point with a peak. You need to identify a peak where there was a rise in the price, then a peak was approached or a point was approached, which brought about this kind of a curved movement, a reversal, you know. That peak will be your resistance, okay? For as long as the price is below it, that peak becomes your resistance. If you want to identify support, look out for a V shape, meaning you have to look something like this. It's to be a point where the price was going down, then the price decided to go up. So this one will be your support for as long as it is the market price. All right, so a support, sorry. Okay, so a support, you look out for a V shape, and then for a resistance, you look out for an inverted V. That peak, that sharp point becomes your support, that sharp point becomes your resistance. So on the chart, that's what you look out for. But as you draw the support and resistance, the starting point is identify your market price. Just come and identify a market price. Like in this case, you identify a market price. Okay, let me delete this. Let me use another chart or something, maybe another coin, just so, oh man. Oh yeah. Let me just pick another coin, just some other coin. Let me pick this one. I'll pick this. Let me use this. Let me use this man here. This is Solana. Okay. So we're going to begin by drawing our support. We said a support line is, when you want to draw a support line, we look out for a V shape. But we make reference to the current price. So the first step is identify the market price. In this case, this is our market price. This is where the price is. Then we're going to look down and identify a V shape. What brought about this kind of movement to the current market price? Is there anything? Is there any U-turn point? Because that edge of the U of the U, the V shape becomes our first support. So the first support will be the first point of a reversal closer to the current price. Okay. So in this case, if we check clearly, we shall realize that we actually have something like that. If there's some V-shaped formed here because there was a drop in the price before we had that turn. So that means the first support will be this. Just pick your horizontal line and put exactly at the low of that candle, that last candle. Okay, you put it at the low of that last candle, the low of the candle, with the longest lower wick. That point becomes your first support. Now, to establish your second support, you should make reference to the first support, meaning you're going to take your first support as the market price, then you look down and look out for another V shape. What brought about a rise to this first support? So meaning in essence, what you're going to do is you're going to look out for another V shape, which is below this first support. Okay, so let's do that. So in this case, you can look out for a significant V shape. We have about 2 points. There is this, then there is this. You look out for the one that has a clear, a clear picture. Yeah. Okay. All right, so that is the first support. Then the second support we can establish it here. We can establish it here. This can be our second support. Or else we can as well. Alternatively, we can establish it here. It still works. Can establish it here. This is the perfect support. Why we call it a support? Because we're seeing something like this. There is a little bit. There is a little bit of movement that the price rose from here to this point, and then there was movement. Yeah. So it becomes a support for the third one, the third support. So we're going to make reference to the second support, which in this case we're going to establish it here. So those will be enough for now. So we have 3 support levels with reference to the current price. Then when we want to establish our resistance, the first resistance, we have to make reference to the current price. So where is our current price? This is our current price. Now, with reference to the current price, we're going to look at a point, a peak, the most recent peak, the most recent swing high. I sometimes tend to avoid some of those terminologies, but let me just bring it in. So we look out for a swing high, the most recent swing high, or the most recent current price. Okay. Me, for example. Meaning we are going to look out for the first swing high, the most recent, the closest one to the current price. In this case, if we monitor this movement, this is a first peak because it is the most recent swing high in relation to the current price. So we're going to establish it as our first resistance line. So let's put it there, put our resistance line there. So that is the first resistance line. Now, if you want to establish the second resistance line, we're going to make reference to the first resistance. So we are going to, from the first resistance, we're going to look up and look back in history to the most recent, the first swing high we come across as we move through this line. That will become our second resistance. The first peak, the first swing high with reference to the current price, with reference to the first resistance, becomes our second resistance. So we shall simply look up and then follow this line closely. What we are going to get as the first inverted V shape, that peak is where we're going to take our resistance from, or we're going to take as our resistance. So let's slide slowly as we go back. All right, here we are. So this is the first peak we have approached with reference to the first resistance. So it becomes our second resistance line. So we pick a horizontal line and we establish it there. Okay. Now, let me stop there. Let me just create those two. Let me come back here. Now, ladies and gentlemen, with reference to this, we know these are the things that are the possibility of what is most likely going to happen. One, from this support, we are seeing the prices approaching the first resistance. Now, the approach to the first resistance, two things are going to happen. Either the price is going to break above the resistance one, okay? If it does so, that means our destination will be resistance two. Now, once the price approaches resistance two, right? That is the first scenario. If it goes above, if it breaks above, if it breaks through, if a breakout happens at resistance one, let's call this resistance one. Let me just call it resistance one. So this is R1. Let me just establish it as R1. R1. Okay. Then we go for R2. This is our R2. This is our R2. R2. Okay. So we know that as the price is approaching resistance one, we expect the reaction to be in any of the two ways. One, either this resistance one is going to reject this price from continuing up, meaning it is going to be like a block, like a roadblock. It is going to be a stopping point. The price will come because first attempt, it prevented it. The price was coming on the build up to this upward movement. On approaching this resistance one, the price prevented it from going up. It rejected the price, and there was this reversal. This reversal was an attempt to come and gain momentum to see if it can break out for the second time, or if it can try to go through. Now, if as it is approaching this point, it may succeed and break above, or it may again reject this price from going up. And once the rejection happened, we're going to expect another reversal to the downside. Now, this is what we're going to see. That if the price comes here, on approaching this point and it is rejected, we're going to see another reversal back to this very area. We're going to see a reversal back to this point. So two scenarios, a reversal or a breakout. A reversal or a breakout, okay? If it does break above, we expect this to happen. We expect this to happen, that the price will come here. If it breaks above, it will go like this. And under all circumstances, it is going to get a rejection here. Then it reverses. If it is to continue, then we are going to see another breakout. That means we are going to look out for where we shall have our resistance number 3. So if you go ahead and establish these resistance levels, trust me, you're going to monitor and you're going to see through that the price is going to be respecting every little price level you have established as your resistance. And the respect will be in an attempt to either break out or reject, or the price being rejected. So you expect a rejection or a breakout, a rejection or a breakout. Now, what is the essence of drawing all this? Why should you really go about drawing this? Ladies and gentlemen, this helps you to identify the possible points of resistance which in other words gives you a possibility of identifying the possible points of exit from the market, meaning there is a specific point that you have to enter the market and there's a specific point that you have to exit the market. So this resistance line or levels are going to help you identify the possible exits from the market. They're going to help you exit the market accordingly, right? Because if you're going to be entering at a specific point, you should be knowing how much you want to take from the market, and how much you want to take from the market should be guided by the resistance levels. You should be guided by the resistance levels. You're not just gonna pick any percentage from the market. No, it doesn't work that way. You must be guided by the resistance, by those resistance levels. Okay, so meaning if you were a trader, I'm just going to give us an example. If you were a trader who wanted to trade this coin, right, in a simplified way, though normally I prefer for looking for an earlier entry in a lower time frame, but let me just give a picture so that you understand. If you decide to enter at current price, you're going to take profit not exceeding 1.4%. Why? Because you're not very sure. You don't know what is going to happen in the market. Yes, the price is rising towards the resistance one, but are you sure it is going to break out? So to be safe, right, to prevent the price from, reversing down again, taking you down in a floating loss, because remember, you would have entered from this point. Now, you want to take more profit, maybe even 2% or 3%, and it turns out that this becomes a resistance area, a resistance point, and the price is rejected from going up. And for you are there. Maybe you're not even monitoring the trade. And from nowhere, you open after some hour or after some time and realize that the price was rejected, and now the price dropped back to the entry point and even below the entry point. Now imagine all this distance. This will be a floating loss. Why? Because the price will be now coming back and looking out for a possible point of support, right? So you will find yourself going into floating loss. Why? Because you were not monitoring and you didn't pay attention to the exit points. Okay, so here, this will give you that guide. However, if the price breaks out above this level, that means you can enter from any point above the resistance 1 and then take profit to resistance 2. That will be your exit point. So if you enter at any point above this area, it can even be here, know that you will take profit not exceeding 3.3%. Why? Because that is the possible areas of price rejection. It is a possible point of a price being stopped from continuing to go up. So it is an area, right, which you should be sensitive to, that the price may find it hard to go above that level. So to be safe and probably take your profit, however little it may be, is to identify those points, which in this case, you know that if I'm going to enter this trade, irrespective of where I enter from, I'm not going to go past this resistance 2, because I'm not sure whether the price will break above. You never know. The price may reach there and then it is rejected, and then it reverses to the downside. Okay, so I would rather take the 2%, 1.5 or 3%, other than wanting 10, 5% when I cannot achieve it within now. So that is briefly what you do. Now, I hope that is still okay as I go out to identify how you use the margin call drops and so much more. So anything else? Any difficulties you're trying to identify in the training? Is it hard? Is it difficult? Is it becoming hard, or is it becoming a little bit sensible? Okay. How about the other gentleman who was crying? I don't know whether it was a he or she, was not understanding anything. Is it okay, or it is still not making sense? I wanted him to see. It was somebody conscious. It was some conscious person. Anyway, not to take it personal. Let's go back there. So that is the benefit, establishing this resistance and support line. Okay. The market seems beautiful this morning. I hope it stays beautiful the whole day. Let me see how it goes. Okay. Wow. It is at 41. This is impressive. Whew. This is crazy. This is very crazy. Yes, it's very crazy. Okay, so let me just do something here briefly. Okay. What did I do? Okay, so just a minute. Let's go back. I want to just see how this Bitcoin fares past this line. I just want to see. See how it fares around there. This was massive. This was absolutely very massive. Ah, I'm seeing it hitting here. I'm seeing it hitting this point seriously. This is 40 what? 43. Hey, Bitcoin. Thanks. I think you're going to give us good money today. A possibility of good money. 43,000. There. Okay. Let's see what happens. Past that level. The psychological level seems a good one. Yeah. So now past. Now seriously. Just a minute, guys. This is equally important. So I hope you don't feel bad when I'm doing this. Let me just try to do this one. I try to do that. Yeah. Okay. 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 That's okay. Let me say something, some settings here. So let's go back to our okay. So is it okay? Was that okay? The aspects of understanding when to enter and probably exit the market. Sorry. So we know now that that is the possible resistance point. And of course now, when I'm still giving you an example of this, an explanation on this before I go to how you identify an earlier entry when you're using support and resistance. So now here, we look at this point that in case this market price is rejected here, we should expect that the price may drop to this point. However, along the movement in the market prices, there are what we call mini support and mini resistance. That between a major support and a major resistance, there could be some mini support points and mini resistance points. So those are the points we take consideration on when we are going to identify earlier entry in the lower time frame. Now, if you draw your support and resistance lines on the higher time frame, like 4 hours, you need to go to either 1 hour or 30 minutes to identify an earlier entry. Now, of course, you can base on support and resistance to do all this, or you can back it up with other tools. Okay, you can back it up with some other supportive tools, which can be indicators, right? But if you want to identify normally, if you want to have a clear and beautiful entry in the market, beautiful entries in the market, you need to always make sure that you draw or do the analysis on a higher time frame, and then you go to a lower time frame to identify, to look out for an earlier entry. An earlier entry is good because if you just based on the higher time frame, probably you may not have a picture of what is happening. Because in a higher time frame, you may realize that the market is on an uptrend, but within a lower time frame, actually a retracement is happening. So because a retracement is happening, it helps you identifying the preset prices, identify the preset price levels. You go and set it up and you enter from there. By the time the market price is picking up, you will be in the market. But if you're going to base on the higher time frame for a retracement or to identify or to set preset price, it may take a little longer before the robot picks up your trade. So here, in this case, what you want to do is you will you will agree with me that within this point, this first resistance and first support, this gap is wide, but within which we may actually be having some mini support and mini resistance. All right? Maybe that's what we're going to identify in a lower time frame. So let's check it out. Let me first mark this up and then we go and check it out so that it gives us a guide. So this is our support one. Just put it as S1. S1. Okay. Perfect. So now we're going to go to a lower time frame. What I would recommend, that is me, you may do otherwise, but I would recommend when you draw the support and resistance lines on a high time frame, like 4 hours. I love 1 hour. I love 30 minutes more. So you can go to a 30 minutes time frame. I'm going to a 30 minutes time frame. Now, within 30 minutes time frame, I believe we are seeing between the mini support and mini resistance, we may be in position to identify some mini support and resistance, right? Mini support and mini resistances. See how price fared here. This was a fair movement, honestly. Very fair. Deep and deep. This is good V. But then, within this fair movement, we have this dap, wrap, dap, wrap, and now there we are. I don't know whether you have seen that. I don't know whether it has made sense. Let me draw it using this tool, this pathway tool. We have had this movement that the price didn't just move linearly. It rose here. Then there was a drop. Then there was another rise. Then there was a drop back here. And now We are in that movement. We are in that journey. Okay? Are you seeing how we are now making that structure? We have had a break of structure here. There was a break of structure here to establish the other new high. Then there was another break of structure here to establish the other new high. See here? Well, this is where we are. See that? We have had series of breakouts, break of structure. So here we had this, the break of structure here. Then there was another break of structure here. So meaning this was the high established. Then this was the higher low. Then this was a higher low when the new higher high was established. Now we are going to create the next higher low before we can establish the next higher high. So that kind of movement is what we are watching out for, is what we are going to keep our eyes on to identify our perfect earlier entry. Okay? So before I go into identifying that, for the last time, are we following? Is it okay? Are we trying to pick something? Are we trying to pick something? Okay. So, okay. It is okay. It is clear. All right. Thank you. It is clear. Now, ladies and gentlemen, this break of structure points are the points we are going to establish our mini support and mini resistance at. They're the point we establish our mini support and mini resistance at. These points of break of structures. This one's here, this, and this. So literally what you do, you just pick a horizontal ray. I can pick a horizontal ray. I'm going to draw, just put it here. That's one. Don't worry, just put it. Don't be subjective, just be objective. Just do it freely without any pressure. Put one there. Okay. Pick another horizontal ray. Put another there. See that? Now, with this, ladies and gentlemen, with this, what we are trying to see here happening, the price at the moment is below, clearly, okay. Okay. So the price is actually, a minute. See? So you are bound to see that sometimes the wicks of the candle may sometimes surpass or go below your established resistance line, support line, or it may go above slightly your resistance line. It is very fine, because when you're drawing these lines of resistance, we don't entirely take it as a line, we take it as an area. Like, for example, if we were to use an area, then we would have considered the entire point here. Look, we're going to look at this point, the entire point here, as an area. This would be the first area. See that? This would be the first area. You see that at the end of it all, it has even covered the other wicks that had popped below. The next thing we're going to do, even this other one, we'll look at it in terms of an area. You see that? Consider this as an area. See? It is an area. The same applies to the upper one. That would have been an area as well. So at the end of it all, if you are to base on an area, it is something that will give more sense. It will make more sense to you, yeah? If you use an area. But sometimes when you're drawing this line, it is okay. Look at it at a wider perspective. Don't only take that. Why is it that other points are not touching? Or why is it that some other candles have wicks below the line we have drawn? It is okay. It is okay. What is most important, if you're drawing this support and resistance line on an uptrend, identify majorly what we call the higher highs, because those are the points of a stop. Those are the stopping points that prevented the price from going up. That is what brought about an establishment of a reversal or a retracement to bring about a continuation of that trend. So take consideration into that one very keenly. So like here, we identify this as our high that was established in the mini movement, and this was another high. So that is where you have to draw those horizontal support and resistance. So if you have done that, in this case, if you were a trader like me, like most of you are, and you wanted to enter this market, what you are going to do is you're going to identify, you're going to enter at current price, take profit to this level. Same time, to be safe in the market, from point of entry, drag this below to the first mini support, and that becomes the margin call drop for the first call. Your first call, that will be the margin call drop. It will be 1.02. Now, why do you sometimes, now remember that when at all this price is reversing and is coming down, it may exactly come and touch on that very point, that very line, or it may slightly dip within the area, or even towards the last line within the area. Take that note. But normally we never want to take chances. We want the robot to take action immediately, because at times some retracement are really not powerful. The momentum of the market sometimes builds up so quickly that the retracement may not be as we expected. So you may find that the price is going to retrace and it really doesn't come to the point we expect. So it just stops midway without even touching on the area we have drawn the lines in. So when to do that, normally what I recommend to my team is that as you're establishing a preset price, or you're establishing what we call the margin call drop, okay? Measure from a point you're looking at as the margin call drop, okay? If it was 1.08, try to take off percentages off. Meaning, if this was the point you wanted to establish the margin call drop, try to establish something slightly above, meaning lessen it by around 0.2, right? To take care of the other aspect of, the market price dropping and not touching exactly the point you wanted. If it is a preset price you're trying to establish, negative it by 0.5, okay? Reduce it, create it by 0.5. For example, if this was the preset price you wanted to establish, 64.05, instead of putting at this, exactly establish it at 64 only. You remove the 0. This is 0.05, okay. Subtract 0.5 from it. So if it was 64.05, this should be 63.05. This should be the exact preset price. Why? Because you never know, as the price is trying to come towards your preset price, it may not exactly touch on the preset price. It may stop midway before touching, and then you see a reversal to the upside. You missed that trade. All right. Okay. So I hope that is okay. That is very clear. So that is how you establish your margin call drops, including the second margin call drop. The second margin call drop, if you pick from here, you need to make sure that you establish it from the point you did that, you can drop level here. Okay, principal objective 2. Reduce it. So if it was that means if it was 1.72, let it be 1.7 exactly. Let me see. That means you would have removed the negative one. This is what was negative 1.2. Okay. Remove 0.2. That means it should be what? Should be negative 1.68. So you just do that. It is okay. You can just negative it. Even you can drag it the way it is, but then when you're now setting it up, you reduce it by negative 2, negative 2, so that at least the robot is able to take action exactly, because it may dip and it really doesn't touch the point you wanted, but it may just come midway and then reverse. So here it would have not touched, but if you put the other aspect of the negative, at least it would have been picked up. And you know the importance of the robot buying a position when the price is going down. The intention is trying to narrow down the gap between the average price and the current price. So in other words, reducing the floating loss. That is the aspect. So never make your robot never to buy. Let it always buy. Try as much as possible to set it in such a way it buys, because it will be to your advantage. Okay. Ladies and gentlemen, time is up. There's so much to say, but for today, I think I can end here. The other thing we can see tomorrow, we can pick up from there tomorrow and see how we go about the other part. There's still a lot that is just still drawing support and resistance in the horizontal way. There are 3 ways in which you can draw. You can draw it in an uptrend, in a downtrend, or horizontally. So you can draw it in a downtrend, and we shall also see how you make perfect entry there, and also on an uptrend, how do you make perfect entry beside the horizontal trend lines. So for today, I think I may end here, and I hope it has been helpful. If it was something, it was helpful. Let me see a one on the chat. If you picked out something at least from the class, let me see a 1 on the chat. Oh. Okay. I think for today, it's been a pleasure having all you guys on, and I'm seeing someone's hand is up, but okay, let me hear what you can say just for within a second. Then we end. That was who? Before we can end, let me. Mercy. Yes, Mercy. You may unmute.
Okay.
And I hear you out.
Thank you, Code Musa. Thank you. I really appreciate. My question is.
Hey, Mercy, you were a male. I mean, I thought you were a female. Anyway, I'm joking. No. That's okay.
Thank you for the lecture. All right, so yeah. My question is, when you are working on the call drop, I thought I thought when you take minus one at minus 1 point something at that call drop, I was thinking you are going to distribute that 1 point something on any call drop. Like for example, now if the total call drop or call limit is 5, you are going to divide that minus 1 divided by 5 and distribute it to the margin call to the call drop. Is that true? Or the way you are taking it, we take 1 point, then we take another one, measure it, take taking the support down and putting the values on the taking. Because I thought personally, what I support line and dividing the number of call limit that I set for that trade in particular. So, but this morning I'm seeing different options.
Hey, Mercy. Personally, I have never encouraged establishing 3, 4, 5 margin call drops at a go. From my own experience, I've never encouraged that, and I don't do that for the team. For my team, I always encourage you establishing a margin call drop at a time. Listen, at the end of it all, after drawing all your support and resistance, and you knowing the possible points of, of market drop, those different levels, the different possible areas of support, those are the possible points of price reversal. Of course, when the price drops, you expect them to be halted at those support level, and then there will be some sort of a reversal to the upside. Now, if you already established those, to me, I always encourage you, establish a margin call drop at a time. Why? Because there, you're doing 2 things. 1, you are ensuring proper wallet management. You are making sure that the robot is only buying when it has to buy. Not just has to buy, it has to buy everything because the market price is dropping. You want to make sure that you are first of all managing your money very well. You don't want to expose their things at a go, because you never know, anything can happen in the market. Remember, we don't control the market. Anything can happen in the market, and then the market goes through a very serious dump. And if the robot buys everything at a go and yet the market is still dipping, you may not have the funds to actually benefit from the sub-sales. You will not benefit from the subcells. You will not benefit from the replenishment aspect because you will not be in position to replenish once the market goes so much against you. But there are scenarios where if you reserve some funds, even if the market dips by 20% or 30%, there is what we call market stabilization. The market stabilizes after a serious dump. Now, as a trader, those are the opportunities you look out for in the market. If the market dumps and you have a reserve of capital, those are the moments to begin enjoying the profits. Even when you're floating deeply, you can be making money through the subcells. But if you exposed everything because you said you wanted the robot to just buy, you want to establish 4 margin call 5, trust me, if that scenario happens by mistake and you're not online, only to open the robot you find is negative 30, 40, trust me, you'll wish you had not established those margin call drops at a go. So establish one at a time. If the robot buys off a position, then go ahead to establish the second one. If it buys off the second one, go ahead and establish the third one. And as you do that, you're doing that like a professional trader, not a gambler. You're knowing what you're doing. So it is not about dividing. No, you don't have to divide. You don't have to divide. Okay? Though some people have in mind that, you want the robot to buy quickly, so that it pumps in much in the market, and so that in case the market, comes back in my favor, I can be in position to get much profit from the match that has been exposed in the market. You have never been heartbroken. You have never. Yeah? You have never. Ask some people who have been in the business and that happened to them and the coin dipped by 60, 70% because of greed, wanting the robot to buy quickly. That's when you say, oh, the market is funny. So I don't encourage that, Master. I never encourage you to do that. Establish a margin call drop at a time. Okay? Maybe I'll elaborate more tomorrow, but that is it. That is it. Yeah. Lastly, as we end, because the next call I think will be due. Paul, the last one.
Good morning.
Good morning.
Yeah,
good morning.
Thank you for coming around late.
Yeah, it's fine.
That was
some
circumstances beyond my control. I came you guys elaborate. I wish I would have done you, but for now, what time will be the Zoom meeting for tomorrow?
Same time, 7:30 normally. It will be at 7:30.
7:30. Okay,
East
that's
African time.
Okay, that's 5:30 Nigerian time then.
Yeah. Possibly.
Okay, that'll be all for now.
Okay. All right. Thanks, guys. Thanks for coming in, and let's meet tomorrow. Maybe before I end, Coach Mopiwa, you have a word or two before you can end, please. I don't know if the leader Julius is still around. We're going to end this because I know the next call he may be on.
All right.
Yes. Okay.
Thank you so much, Coach Musa. We really appreciate your time you have invested in us this morning. I hope, leaders, you have been able to learn. And Coach Musa will be back here tomorrow so that he completes what he has started. But I believe you have been able to learn and be able to. This is technical analysis. So you go and apply what you have learned because it's only action takers that are money makers. Thank you so much, sir. We really appreciate. I also packed somewhere here. I'm just continuing my journey to go and activate some people, but I wanted to also stay here and learn. Now, after the lesson, the journey continues. Thank you so much, sir. We really appreciate. Thank you, Coach Mopiwa, also for being with us all the time. Guys, we love you so much. Have a nice day. See you on the next call tomorrow. That's maybe when your question that you had today will be answered. God bless you, and see you on the Signals and Preset Zoom done by Leader Kuri Sembatia. We love you all, and bye, everybody.
Bye-bye. Gracias.